Good evening, everyone. Welcome to the Market View commentary for Monday, August 8th. Excuse me, Monday, August 12th. Sucking down a little bit of water here, and let's get started. Glad to be with you, and I'm glad to be with you after a 390-point down day in the Dow, because I spent a lot of the day going over what's happening in our market. And really, I spent my whole morning trying to figure it out. Pretty, I don't want to say unbelievable, because we're actually in another, I don't want to call it historic, but we're in another unusual time frame here in the U.S. And what I mean by that is, well, I'm going to start off a little bit differently. I'm sorry. I'm going to work on this. Let me start this way. Right now we have the markets. Let's put it this way: the equity market and bond market moving in unison. Doesn't happen. Usually they're in inverse. The bond market goes down, stock market goes up. Stock market goes down, bond market goes up. But we have a problem. Houston, we have a problem. Right now, 60% of dividend paying stocks and the S&P 500, 1.9% dividend yield, 9.8% dividend yield, is higher than the 10-year Treasury at 1.649%. And so when this happens and you see stocks going down and no uptick in the bond, you get the bond markets and the stock markets that fall in unison. Why is that a problem? Out of curiosity. So why is this a problem? Why would it cause a drop of 1.48% in the Dow, 1.22% in the S&P, 1.20% on the NASDAQ? Why would it be causing a problem in the stock market right now? Yes, Lance, because they're not supposed to. But you're not far off there. Give me something a little bit better than that. Because they're not supposed to, Hurley. Come on. Give me something more important than that. Why is this the problem? Couple question marks. Two interesting comments here. In is low, there is room for QE without going to zero return. Very, very astute comment. There was one other comment. David made the comment that we can't fight global devaluation. So that's, you started using a lot of big words. So let me play off of David's comments right here. right now, the problem, or why them comes down to valuations. Now, valuation is a very commonly used word by industry professionals that don't know a damn thing about the market because they put you in bonds. They put you in passive income. I always chuckle when I hear some idiot that has a license start to talk about valuations, because more often than not, they don't know a damn thing, but they've heard a valuation number on the TV. So the short answer is, and it depends who you go to, right now, the S&P 500 is fully valued. The valuation is in line. It's even a little to the high side historically. So if you're going to ask me what valuation is or what valuation means, valuation is the relative pricing of stocks and equities, indexes, compared to past performance. Things are different. We screwed up the system. We screwed up the valuations in 2008. We went full socialist bailout, which makes it awfully damn hard for capitalism to work. In fact, I'll be honest with you, capitalism doesn't work when you go full cash socialist bailout. No one pays a price for stupidity. No one goes out of business. No one better comes into place to take the spot of the jackass that screwed it up in the first place. And when you do that, you then run into 11 years later industry professionals who aren't the brightest bulb on the tree, unable and unwilling to put a market number on our market that can be justified. I hear everything to we're overvalued, to we're undervalued, we're only at 17. Well, we're at 19.33. We were at 23 on the S&P. Well, Ford's undervalued. It's 10 times earnings and at a valuation of, 8, 5. So if it's been undervalued for the last 5 damn years, what's going to make the change? Should they have been bailed out so they're more cash rich today? Because that's the BS that happened to government motors, GM, Chrysler. We screwed up 8 years ago bailing out homeowners that probably had no right to own a home. Banks saving our financial system because only BS got taken out. Not JP Morgan, not Morgan Stanley, not Bank of America, not Wells Fargo. But Wells Fargo's done everything to F up every other mortgage opportunity that they've had. No one paid the piper. And when no one pays the piper, the same BS happens. You get an influx of $6 trillion, maybe as much as 13, as we're backing banks and home loans and QEs and lowering the value of the dollar, and the market doesn't know where to value itself right now. No clue. Nobody knows if it is cheap, expensive, or fair valued. That's all they talk about on Bloomberg, CNBC. I like Fox because they're kind of sticking it to a couple people and being a little more honest. But yeah, let's face it. We don't know where the hell we're at. Which leads me to a comment on how I'm going to look at the markets going forward. Going forward, September, October scare me. And I would expect a big drop in one of those months. October is usually what, the worst month in the year, right? Then you have February, then it's back to September. Not really good earnings as people are chunking money into the Christmas season. You know what I laugh at? Now's the best time to scoop up retail stocks that are getting obliterated right now. Why the hell would you buy Macy's? Why would you buy Nordstrom's? They suck. Lululemon's kind of sheltered. They're out in Canada. Under Armour has an opportunity, but you sure as hell wouldn't buy Nike. Tapestry, the old Coach, wouldn't touch it. How about Dillard's that reports? JCPenney. Man, would someone just put JCPenney out of their misery? Would someone just shoot JCPenney in the head? It's there's trouble in the markets when your professionals have no clue where they're going. So out of curiosity, what can change that? So what changes the narrative? Trick question. What changes? Bill's my favorite. Put Hurley on TV. Let's do the Hurley hustle instead of the Crane America. Let's do the Hurley hour hustle. It's funny. A question was just asked that I missed, so I need to apologize for that. Actually, two questions. May not be crawling correctly, but isn't consumer debt at an all-time high? And I'm going to say no. That was out there in time, but people are cash rich. Consumer credit was supposed to be at 16.5 billion last Wednesday, came in at 14.6. 1.9 billion, or more than 10% less than was expected. The second comment, isn't the Treasury getting money? And so that's, I'm not sure what you're asking there, Lance, but the Treasury budget came in $119.27 billion less than it was in the past. So 30 billion is tariffs, and we're taking off the books in 90 billion that's rolling over on treasuries that we bought ourselves, that we propped up our own market. So hopefully that's answering your question there. What changes the narrative? China progress in September. A weaker dollar. That can't happen because we are the reserve currency. The best way to state that one, because we're the benchmark, we're also the whipping post. Because the U.S. currency is the benchmark, we are the whipping post. So if we lower our rates, everyone else starts to do the same thing to keep our rates where they have to be, because we're the world's reserve currency. We can't deflate our debt like other countries are able to do. Rise up the inflation, their money's not worth as much, pay a crap load off to us. I watched Brazil do it in the early 90s. Oh, billions of dollars, inflate everything away. I had to cash $20 each week. And at one point in time, $97 made me a millionaire like 9 times over. $97 a month, and I was a millionaire in cruzeiros in Brazil. Brazil! So they're giving us all this paper that wasn't worth the ink printed on it, but paid off their U.S. debts at that time. Lowering interest rates will only cause more of the same thing that is happening right now. Judging by the stock market, lower the interest rates, pal. Oh, shit, our stock market is going down. Way to go, Trump. Oops. Oops. That's kind of a big oops. Oh. Someone asked me, what's my biggest concern? So someone asked me, as a money manager, what is your biggest concern? Is it Europe falling apart? Because they're on the precipice of doing that with Brexit crap. Is it China going into a big recession that we'll find out retail sales, industrial production on Wednesday, and on Friday we'll see foreign direct investment year over year and year to date? Is it Germany giving negative interest rates out? Mandatory loss on people's accounts. Because their socialistic rules mandate certain amounts of people's retirement has to be in the boons, the buns, the boons, whatever that freak it is. My biggest concern are we, that is the US, going to go through the 2008 reset on our markets like we should have done 11 years ago? That scares me. We're not going to go into a recession. We are not recession bound with our economy right now. Which means, how hard of a reset are we going to have to go through to correctly price homes, to correctly price our stock market? Just a question. How high could gold and silver go? I feel like they're overpriced. If you were to ask me, is silver really worth between $16.83 and $17.01? I'd probably say no. It just isn't. 1707, excuse me. Is gold worth $15.22 and 60 cents right now? No, it's not. Talk about a silent or unappreciated area of the market. All I heard about how good REITs were doing in real estate. Yet the biggest winner is gold. And it's done it quietly, shockingly quiet. Rarely talked about. Own a little bit of gold in your portfolio. Have a little bit of gold at home. Have your money manager send you out some 1 ounce silver coins for a Christmas gift and a thank you for your business. All day long, between CNBC, Bloomberg, CNN, MNCNBC, whatever the heck the one is, Fox News, all different. The valuations have been screwed up with the bailout, and we can't come to a consensus as a whole on where our market should be valued at, if it's cheap or expensive, if it's a good time to get in or a good time to get out. With that said, and the beatdown that we take on a Monday, my expectation is our markets will finish higher this week. Someone's going to talk about and brag about, or will fall down and hit the 200-day and talk about time to nibble, buying opportunity. The scary part is, like I mentioned a couple weeks ago, we should probably have to go down and test the June lows, a double bottom. But to do that, we'd have to cross through the 200-day. And there's got to be a crap load of orders stacked up there to support that 200-day. If we take a look at the S&P 500, I really think we should go down and test like 2,700. Maybe 2730-ish, which would be the lows in June. But there's a stronger long-term support at 2,700. NASDAQ. You want to hear this one? The NASDAQ should go back and touch 6,500. Talk about some inflated valuations. Not nearly as bad as 2008, not nearly as bad as 2000. A lot of companies are cash rich, but the stock buybacks has messed up the real value of the companies. The historic real value of the companies is what I should be saying. Just to take a peek and look at it a little bit differently, I do like going to FinViz, free charting, right? Dow Jones Industrial Average. This is the futures one though. No trend lines. No nothing. Futures look up though. No trend lines, no nothing to push here. S&P 500. Nice to see the futures up a little bit there. NASDAQ. No trend lines. If I can go ahead and draw a trend line though, again, what scares me, short-term huge downtrend, longer-term uptrend, it's been violated. We broke below. If I could draw a straighter line, it actually looks something like that, where the long-term trend line has been validated and we have a short-term channel heading down. Here's the 6,500 I'm talking about on the NASDAQ. It's not a made-up number. I give the S&P a little more credence. But 7,000, or excuse me, 2,700. Comes right back to that area. And in all honesty, with all due respect, the Dow is symbolic. The Dow is not an important index. Nothing's indexed against or to the Dow. I don't care about the Dow, so I'm showing you the NASDAQ. Trying to show you the Dow. I don't care where we go down to it. Not important. But 24,200 would be one of my better guesses. And that could be a realistic area that we could head to in a crappy September, October. I had some new money that came in, $3 million. And when are you going to generate me some income on this? I had to be honest with you. Ask me that question in 3 months. Let's get through August. Let's get through September. Let's get through October. August, September, October. Let me make up as much as I can on the downside. So if we have any Christmas rally, we'll have 20 to 30% more shares of Under Armour. Ford's going to get another 10% more shares. Apple, we made up some good money. Baidu's beat to hell. What a screaming buy historically Baidu would be right now. We get a break. I think Disney's undervalued from all their money that they're making. Well, Kevin, didn't you see their last earnings? I can always count on Bill to make sure I share with you guys some of the most important stuff. Because my first goal I had for you was a fundamental analysis at Disney, and Bill made sure I had it, which I greatly appreciate. In all honesty, I greatly appreciate that someone wants to make sure that I haven't missed something. And I always tell them, now the time you don't send it will be the time that I miss it. Will be the time that I forget about it. Can Slim system. Pretty interesting. You want a good read on Disney and some made-up acronym that justifies if it's a good price? I kind of just giggle and go to the conclusion, right? If you're a Disney shareholder, it hurts to see a down quarter, but don't let one slow quarter dissuade you from seeing the bigger picture. Disney has too many things going for them for shareholders to be concerned about performance. There's always an overreaction to subparting reports. Fundamentals are there for Disney. It's a long-term keeper. Very interesting read on their Can Slim analysis. I would agree. It is undervalued. Getting back to valuations. If they can do anything like what Netflix has done, what some of the media companies have done, they should have a huge upside to like 196 up to 207 or something like that. I forget exactly, but it's right around 200. All right, jumping back up here really quickly. Where will August end? I keep ratcheting my numbers down. Earnings this week, we're starting the retail earnings. Macy's, Allergen, Intapp, Cisco. We had Cisco Foods today, JD.com on Tuesday. Alibaba, Walmart, JCPenney, Tapestry, Dillard's, Nvidia, Deere on Friday. Earnings most likely won't impress. Economic reports, Thursday is a fuel day. It's funny because I heard a lot of people talk about the CPI reports are going to be so important on Tuesday. No, there's not. There's no freaking inflation right now. We can't even generate inflation or deflation by raising or lowering our rates. Globally, it gets counteracted by other banks and other feds and other interest rate cuts. Inflation on Tuesday is going to be important. No, it won't. Retail sales, productivity, unit labor costs. Good thing I can't spell well. Industrial production, capitalization, business inventories. Big day on Thursday. Housing starts, building permits, monthly options expiration on Friday. China. How bad are we hurting China? We'll find out Wednesday and Friday morning. Lots happening here. Lots happening in a market that's uncertain where it's supposed to go. As I went through, I had the Disney report. I had a pretty interesting one that I think I've shown before. The yield curve everyone's worried about is inches away from flashing a recession signal. I'm letting you read this, but we are far from a recession. Companies are too cash rich. We are far from a recession. I did think this was interesting. Trump is ruining our market. Struggling farmers are losing a huge customer in the trade war, which is China. Yet they're backing our president better than most, is all I can say there, on a polling basis. What else do I have? I have, the self-made millionaire. This is kind of an important one for me. I recently am looking at putting quite a bit of marketing money to work. You know, at least for me, somewhere in that $10,000 to $15,000 range. I'm going to start to hit social media. I'm going to start to push out a little more education, a little more 2 to 7 minute videos, just to get people's attention so that they don't have to go through another 2008. But in interviewing 7 marketing companies, the one that I really liked the best, that I really thought would be the one I would go with, let me know that I don't own a real business. I own a lifestyle business. And boy, did that piss me off. It's like, what are you talking about? Well, you know, you're not at 50 or 100 million yet. You know, you're just sitting there at 26, 24, 23, 29. You're just bouncing around there. And it crushed me for a week. For a week, I was crushed. I would even say I was depressed. Oh, I got a lifestyle business, not a real business. But a couple things kept coming back to me. One of the most important things that came back to me, I've built my business organically. I've paid my dues in education. I've gone out to golf courses. I've talked to people. I didn't go work for 10 years for Goldman Sachs. Save my money for a couple years, wait out my non-compete, go steal the business back. I'm not like the other money managers, where their true work stops when they put you into a fund. And their job is every 2 to 3 years to churn you out of a fund. That don't have a friggin' clue of what you're in. That don't know why you're in anything other than last year it was good and they're pushing it this year to give them a bonus. But a pretty interesting read that basically says that people work their butts off and scrimp and save to make it, and they're justifying making it, you know, it's $750,000 a year, which would be awesome. I would take that. But that once they make it, they're not using some of that money to buy themselves. The one thing that they're not going to have is more time. Now, I'm still not at the point where I feel I need to fly a first-class flight. But I do spend some money on some things that buy me or give me more time with my family. Especially with my kids as they're going through their high school years. I think I'm going to have 3 in high school this year. Junior, yeah, I'm going to have 3 in high school this year. Unbelievable. Junior, sophomore, freshman. Where in my time, my biggest mistakes were made in high school, not college, high school. If I can only save my kids from making some of those same mistakes. A very interesting read that I suggest you read. It made me think because of the position I was in. With that said, what questions do you guys have that I can answer for you? What questions do you guys have that I can answer for you? Anything? Good question. So why haven't you protected everything yet? So that's, I mean, that is a fair question. And I would come back and say to you, because I think something's going to happen doesn't mean it's going to. In fact, some stuff I said probably last week is irrelevant today. Every day is a new day in our market. Let me put another something out there. Let's go this way. Oh, that's not helping me out, but technically speaking, I don't think Visa would be technically bullish. Let's take a quick look. Well, it is. So my short answer is not everything we're in is technically bullish or looking like it's crossing over. So I'm not usually going to go put a bearish position on a bullish stock. But as I go through and look at some things, I may need to reconsider. So damn it, Lance. Because I'm not ready to, because actually technically I probably should start putting some more protection on. So I have some levels. In all honesty, I'm looking at 135 on Disney. Hasn't broken it yet. Apple was 200. Held it today. Visa 177. Is it 176? But I could even say 175. It used to be 177. Probably closer to 175 now would be my target that I'd be looking for there. With that said, I also have some leaps where I'm not yet ready to put protection on leaps when I can still dollar cost average them. Baidu, we have protection on though. Boy, do we have protection on. We made some great money with the fall so far and so fast. And Baidu's trading at 95. Really, it's going to be 120 or it's going to be 85 on its next earnings. That's the area that Baidu's going. So, good question. You might see some more protection on everything, and because I'm giving some things a little bit of wiggle room, and it really comes down to, because I'll be honest with you, I'm not always 100% perfect. So because I'm not 100% perfect, I'm okay with waiting a little bit. There's my 100% answer for you. because I can, I'm going to wait a little bit. Because I'm not going to consider that every time I do something that I don't know, that every time I do something that I think I'm going to be in trouble. Just because I think it's going to go one way, I don't have to bet it all in the house and guess wrong. Answer your question there? All right, what else do you guys have for me? Good question. Figures it'd come from you. Lance, if it wasn't you, it'd be Bill that would ask me that same question and put me to the test, but that's, you guys have every right to do that. Nothing wrong with that at all. And the next question. Okay, maybe Bill wouldn't bring that to me. All right, guys, have a good evening. Have a good evening. I look forward to seeing you tomorrow, and really, it's going to be an interesting week. It's going to be an interesting week, and futures right now do say we'll get a bounce back. Hopefully I'm going to be right, and we'll go from there. I appreciate you guys being here with me tonight. Have a wonderful evening, and I will look forward to seeing you tomorrow night for the trade findings and adjustments. Good night, everyone.